Ghana's Monetary Policy Committee will announce its third monetary policy decision next Monday, but analysts at Chapel Hill Denham say the Bank of Ghana has justification to cut the monetary policy rate from 14.5% based on the positive inflation reading in April. But they do not expect the committee to ease the monetary rate yet, given the elevated fiscal pressures. And Omotola Abimbola, a macro and fixed income analyst at Chapel Hill Denham, joins us to discuss this and more. Thank you so much for your time today on the show, Omotola. Let's get into that, note from your report where you say the Bank of Ghana, you think they have a justification to cut the rate.
That's correct. Thanks, Kenneth, and glad to be here. So the Bank of Ghana is scheduled to meet this week for its 2-day MPC meeting. We are expecting the decision of the MPC next week, Monday. And our view is that the Bank of Ghana will actually retain its benchmark policy rate at 14.5% at the meeting. And our expectation is mainly due to the fact that the economy, although is now witnessing much more slower or lower inflationary pressures. Our belief is that the BOG will remain very cautious in the near term, given the fact that the fiscal condition is still very, very, challenging. Last year, due to the COVID-19 outbreak that affected government's revenue, and also led to a lot of expenditure pressures, we saw fiscal deficits more than double to over 11% of GDP. From 4.8% of GDP in the prior year. By the time you exclude all the other energy sector related obligations, financial services sector bailouts, and that elevated fiscal pressures led to a significant increase in public debt level, now approaching 80% of GDP. So that's a very, very major concern for the BOG. On the other hand, we have seen inflation level slow down materially, particularly in April. Partly due to base effects. We saw the headline inflation reading narrow significantly from 10.3% in March to 8.5% in April, largely due to high base effect. And the outlook is that it's going to remain below. It's going to remain within the BOG's target of 6 to 10% over the near term. But be that as it may, I think the primary concern for the BOG at the moment is the fiscal condition. If we were to see fiscal consolidation actually gain a foothold, by the time we enter Q2 2021, then by then the BOG will have additional reasons to actually cut its benchmark policy rate.
All right, let's leave the monetary policy meeting aside now. Let's get into sentiments we're seeing play out in the capital markets there. But for you, I would like you to speak on what we saw play out in the primary market auction last week and what are your expectations going forward?
So I think for the fixed income markets in Ghana, we have seen a very strong bullish momentum thus far in 2021. On an aggregate basis, GHS sovereign bonds rather, they are up by double digits, over 10% in USD. Thus far in 2021, as we have seen yields collapse in the fixed income market by over 130 basis points. And that strong rally that we are witnessing in the fixed income market, I would say is driven by a couple of things. The first one and the most important one, I think, is the fact that the broader consensus investor outlook for the CD is very positive, or let me say stable, for 2021, at least in the first half of the year. Thus far in 2021, the CD is up by about 1.6% year to date, and now among the strongest performing SSA frontier markets currency thus far in the year. And that strong or that stable outlook for the CD, I would say, is hinged on the fact that commodity prices are now rallying once again. Ghana has a very diversified commodity exports, including gold, oil as well as cocoa, and all the major commodities are doing pretty well in 2021. So from the current account perspective, the outlook is positive for 2021, where we're expecting current account deficits to narrow significantly. And on the capital and financial accounts front, I think the government of Ghana has also, mastered the art of actually appropriately timing its Eurobond issuance so that they could give the BOG enough firepower to defend the currency. So not so long ago, we saw the governments of Ghana approach the Eurobond market to raise a very substantial amount of money, over $4 billion, and the proceeds from that issuance is being partly used by the BOG to defend the currency. So the combination of very stable, or let me say fairly stable, outlook for the CD, as well as the fact that before aside the fact that real interest rates or real yields are still very high in Ghana compared to other SSA frontier market countries. I think those two factors have led to a very sustained bullish performance in the Ghanaian fixed income market. But speaking to the outlook, I think the key thing to note is that for the near term, the outlook for the city is still fairly stable. But the level of foreign portfolio inflows due to the fact that there are still elevated concerns regarding the fiscal balance, as well as the fact that if you look at the external environments as well, financing conditions are tightening from the broadly stable or favorable condition that we have had for most of 2021.
Yeah, very bullish on you say there for the fixed income market as well. We're seeing the equities also on steroids here. We're seeing that doing year to date of about over 24%. How sustainable do you think is going into the rest of the year?
So I think, broadly speaking, the capital markets in Ghana, both equity and fixed income, they performed quite strongly thus far in 2021. The CD and the outlook for it has been very central to that conversation. And as we go forward, for most investors who and even foreign, they will continue to look at pointers to CD stability to guide their investment decisions. And our view, like I mentioned initially, is that over the very short term, we think that the steady stability that we are currently witnessing will probably come under some sort of pressures. And I think the major risk to the steady outlook at the moment is external financing conditions. In 2021, thus far, the Ghanaian fixed income market has been able to attract over $1 billion of foreign portfolio, inflows into the sovereign government bond markets. But that's the conditions that led to that strong foreign portfolio inflows is partly due to the fact that external financing conditions have been fairly favorable. So we have seen major key central banks all across the world, essentially, keeping monetary policy broadly accommodative to support the recovery of their economies, from the COVID-19 pandemic recession. But as we go ahead, as the global economy continues to reopen, I think that favorable external financing conditions will probably give way to a relatively much more tighter conditions, and that's going to have a major impact on countries that have significant external holding of local currency debt, and Ghana is one of them, where we are having close to 25%, of sovereign government bonds being held by foreign portfolio investors.